what implemented and that was poured up by with Brewer's funding. Brewer's funding is the man behind this idea. When I say the man, I'm using man in context of what of the whole thing together. Okay, yes. So this is a pro firm that wants the best for traders. This is a pro firm that wants traders to do so well all around the world. And they are not just going to give you capital when you prove you can even handle it alone. They're also going to give you information to help you sustain your challenge and to help you even sustain your funded account. So yes, they are doing a whole lot, and it is what appreciating this team. It is what appreciating this pro firm. You all know that those pro firm outside, they're not even many even care about traders. But look at it, look at what Bruce Fund is doing, and it is so beautiful to be a part of this team. It's so beautiful, to be acknowledged even around a very interesting thing like this. So that's that for that. So this is XMP 500. And you know how we do it here. I'm just going to talk about maybe 4 or 3 currencies. When I say currencies, the whole of everything has to do with FX, both indices, energies, and all, and even the currency. So I'll be talking about 3, and I really want to take my time so that you can really get it. Because I'm even talking about S&P 500 first, because something solid has happened. And if you have been following, my analysis for some while, you would know that the first thing I do is to go to the higher time frame. Okay, so as you can see from the higher time frame, I know if we call a 2-year-old child to this screen, that what can you see? Okay, can you identify if the candles in this chart is going to the upside or it is coming to the downside? Like, I'm talking about the overall trend of this. And I presume a smart child is going to tell you that, oh, uncle, or rather auntie, I can see that it's forming, it's showing more of green candles, it's pushing more to the upside and it's coming to the downside. Although the kid might not know the formation of what higher highs and higher lows, but the kid will tell you that, yes, I know what is called ascending and descending. And I can tell you for a fact that this is what's ascending and not descending. And don't forget, the higher time frame are like the big guys. Okay, it's just like 2 people wants to go to a party, and one is a big guy and the other is just one who is still trusting to be fine and all. The big guy decides what they do. It decides not necessarily because he's controlling the other person, but probably because he has the funds to sort things. He decides what they drink. He decides, okay, yes, let's take this. And even when the other guy might not really have to, maybe like, oh, I don't have the money for this, but the big guy be like, no, don't worry, I got you, I cover this. You understand that kind of scenario. So that's what the big time frame, the higher time frame does for the smaller time frame in the chart. So the higher time frame are the decider. Okay, the smaller time frame only follows. They're like, okay, oh, you want us to move this way? Okay, yes, boss, we move this way. Oh, you want us to go this way? Okay, yes, sir, we go this way. Okay, you want us to move to this direction? Oh, we follow you without hesitation. That is what the higher time frame does to the smaller time frame. Okay, you let this practical thing even stick, so that you can even be able to reflect and even work with it. So yes, this is the higher time frame, and you can see that from the monthly. We have it's clear that this has been ascending far back as at this is 2014. Okay, you can even see far back as at 2000. That is 23 years ago. Okay, look at it far back from there even till now. It has been ascending. It has been forming higher highs and higher lows, higher highs and higher lows. So that's that for that. And okay, yes, on my monthly, I just check the overflow. I check the flow of the market, and on the weekly, I come to plot out my zones. Okay, my zones as support and what resistance area. But I call it zones because I don't just want to use a line, because I want to cover both the body and the wick of the candles. I don't just want to. So there are different reactions to every area, and so I have been able to cover. I have been able to map out my zones. I've been able to map out 4 key zones. 4 key. You could see the reaction. You could see other here. You could see another here, and you could see. So I've been able to map out my zone, and you can see from my lowest zone here, you saw how it was able to move. Formed some candles around there, reacted, and moved to the next. Came back again, broke it to the upside, came and retest, broke it to the upside, came here, a major one, came, retest, and went to the, to the highest, highest price it has gotten to so far, and came back for a major retest. And for every, don't forget, I say this all the time, and in case you have not always get to join us, I said for every impulse movement, if you need to write this down, write it somewhere. For every impulse movement, there is a need for retracement or what, consolidation. So at times it might not come as retracement, but don't forget the fact that it is going to stay as consolidation. Okay, so for this, it came back as a retracement, and retraced back to a major place, to a major place, and after retracing, it's been trying to go all back. And don't forget, for even the what's it called, the strategy or the formation to trade a retracement is that to the point where it retraces back, it is expected that it go back to the 100% retracement. So let's say that, I'm not even using Fibonacci now. Let's say that maybe this was the lowest. Hold on, please, guys. Okay, let's say this was the lowest. So this was the swing low to the swing high, and yes, look at it. It had a reaction and came to the 50 to 61 Fibonacci area. So in the next place we should expect it to go back to is to the 100% retracement. That's not what I even want to talk about. So now look at it. While I was analyzing, because of course I analyzed before I came to. I'm not coming to come and do my analysis here. I analyze because I want the best for everyone, and I want you to be able to, get the information clearly and be able to even expound. I get to expound it so well, and so that you can be able to implement them properly. And of course, it is what you get so well, you can even be able to implement. Okay, so on the weekly time frame, don't forget, I have been able to map out my zones, and I took it from the recent, not the recent, okay, but on the weekly, this is a major swing low. I took it from the swing low, and how we draw our trend lines now. You take it from the swing low, and you join it to the next, next deepest deep, and this is a week here, and that was where the retracement got engulfed back to the upside, and yes, from this to the present one. And why I'm so interested in XRP 500, and why I'm showing us this first, rather, why I'm showing us this first before any other pair, is because this is a third touch happening presently on the trend line. And don't forget that the third touch on every trend line is the most, the most radical, or the most interesting, the most beautiful, the most massive impulse movement on the trend line. You should know that, place. The third touch, don't joke with the third touch. So we had our first year. Look how massive the first was too. We had our first year. We had our second. The second had been stalling, and all. And now we are having the third one. And look at it. Look at how last week engulfed to the upside. Okay. And I have been talking about US30. I don't know if anyone is here who had been with me for some while back. Well, I've been talking about US30 and XRP 500. Don't fall for these guys. They are not selling. Even if they are closing below this support, look how we closed below this. I said, don't fall for these guys. They are buying. They are not selling. They just want to, deceive sellers to get into the market and take them off their trade. Okay, so don't get into the market. This market is going to buy, because overall, the bigger time frames, the bigger guys will be the ones to decide for these smaller guys. So look at it, and you see, even after, based on the break or bounce strategy, you feel like after it had closed below this support area, you should start selling. But look at it, he only went to deceive people. And don't forget, I keep saying this over time, that manipulations of the market tends to happen at the resistance or the support area. It happens at zones, yes. So when the market is moving, or when the market is pricing or trading or trending around a resistance or support area, around the supply or demand zone, there tends to be manipulation. Because of course, what you can see, everybody can see. So everybody can see that, okay, yes, it is in a resistance area. And so some people are going to anticipate they are going to anticipate break. Some people are going to anticipate bounce. Of course, they don't want it to even finish. They feel like they want to get into the market as soon as possible. So because of that, the market is going to give you some, if you're anticipating break, it's going to give you some things to deal with. And if you're also anticipating bounce, it will also give you some things before you know it. The next thing you are seeing is that you've been swiped off your trade. So what I'm saying basically is that look how it formed, look how it was able to drop past the support area and came even deep. And of course, all it was doing was to come and give a third touch of the trend line. And look, after that, it had been able to engulf it to the upside. So with all knowledge and the best information I can give is that, see, it is time to get into S&P 500. The only contingency I have, now let me go to the daily to check, to tell you about the contingency. The only contingency I have, and which will be the best way to get into the market, is I want us to wait, okay, but that will be quite too much, okay. The best way I would have wanted us to trade is for the break of the counter trend line, but I might not also say this because I'm having a contingency, and the contingency is that, okay, this guy that is S&P 500, from this tip, look how they rallied, and it formed on the daily. Okay, let's count together. This is 1, 2, 3, 4, 5, 6. So on the daily candles, it has formed 6 green candles. Okay, it has formed 6 green candles, and that is massive. So I fear, or okay, don't let me say I fear. I'm just looking at that. Okay, with experience, I'm looking at there is every need that we should consider a contingency of, will S&P 500 really break to the upside and not even retraces back a little? So now it has hit a major it's not a major one, it's a minor one. It has hit a minor resist area here. Okay, it has hit here. So I expect that, I'm speculating that, don't forget, my overall bias on S&P 500 is to buy, and of course it had been able to engulf it on the weekly to the upside, so you should buy for as long as possible. So but the contingency is that after that push to the upside, I expect that this week it should push down a little bit, probably into this base or somewhere. I don't expect, or maybe you even use your Fibonacci to track. Okay, maybe you use your Fibonacci to track. So I'm expecting it push back into this base a little. I don't really feel it might just break to the upside. But if it wants to do that, now you have to wait. Now, wait for it to break to the upside. And I'm telling you now, if anything is not even going to happen, if what I'm saying, the contingency might not even happen to this backside now, this one is going to happen. If it breaks to the upside, if it decides to break to the upside, it's going to come back to retest. So wait for the retest. If it breaks to the upside, wait for the retest to happen and see it engulf before you buy. But if not, the other thing you can wait for it to push back a little while so that it can give you a better risk to reward ratio. You can wait for it to I expect it to push back a little while. And of course, I am not the market. I am saying that is what it will do definitely. But one thing I am sure about is that S&P 500 is a buy, and on the weekly candle, it has been able to engulf it to the upside. But what I'm expecting, I expect a little rest, a little retracement before it pushes to the upside further. And don't forget, our first level target should be somewhere around here. Okay, somewhere around here. And the overall target, don't let me say the overall target. The next imminent target should be, the highest bank it has reached before. That's around 4784. And of course, we expect it to even go above that so that it can even form a new higher. But whatsoever, this is the first and this is the overall. So that's that and that for what S&P 500. So almost the same thing is also happening on US 30. On US 30, don't forget that there was a time I was telling guys, I was saying it here that, okay, US 30, guys, don't please fall for this guy. Don't fall for this guy. If he closes, he was just doing everything to close, to make people feel like, look, if he closed, and look how the last week candle, look at the numbers of candles he engulfed. He engulfed 1, 2, 3, 4, and even 5. They engulfed 5 weeks candle, 5 weeks candle on the weekly, 5 weeks candle. So you can imagine just 1 week engulfed a whole lot of 5 weeks. That is a month and a week. So this is to tell you that this guy is serious. The buy is serious. Nothing is going to stop the buy. The overall buy is what? It's very serious. Okay? It's very, very serious, and nothing is going to stop it. Please let me check if I'm still quite, if everything is all fine. Okay, I presume I'm fine. Okay, I can see you, Mr. Dan, Mr. Leo. Oh, Mr. Leo. Awesome having you. Mr. Yomitunde, beautiful having you. Mr. Marvin, awesome having you. Please, can you let me know if you can still see my screen and hear my voice, please? So I just push forward and proceed further. Okay. Mr. Liu, don't mind me. I'm calling your name. You know, you've come a long way in this. You get to follow all the time, and looks like I'm more familiar with that name, and I really do appreciate it. Please, can you let me know if you can hear my voice and still see my screen? And if you are really, really following, please let me know, please. Thank you. Okay. Yes, greetings to you, my man. Okay, all is perfect. Thank you so much, Mr. Austin. That man's support is on another level. Okay, so yes, you can see on the weekly. So please, I shouldn't even beg. Okay, let me beg. So please, guys, look at it. Don't let anyone deceive you that this weekly candle is just coming back for a retest to push down. No, it is not coming back. This weekly candle is a big, look how massive it is. A big engulfing candle. 1, 2, 3, 4, 5 engulf to the upside. But don't forget, also I expect the same thing. I expect it also to push back a little. And you can even see I have drawn a counter trend line. If it does not push back a little while for an entry, I would expect it to push to the upside and come and give a retest before any entry. And if you can also notice, you see that I gave a line here, and the line was what? It was from here, which was the swing guy. I brought it down to the swing low. And you see that the market reversed exactly at the 0.27 extension. Okay, it reversed at the 0.27 extension. So presently, as it is, it has rallied from the downside rather, with how many green candles? 1, 2, 3, 4, 5. Okay, 5 green candles, very massive ones. So I expect it to come and give a push back. You can use the Fibonacci to track it. Okay, so you can use the Fibonacci to track it. Okay. I expect a pushback to the downside, and if not, I expect if it does not come this deep, which I doubt it might come this deep, I expect it to at least come to this base and then go to the upside. And if it does not, if it really, really is so, it's so massive and really, really wants to push to the upside, I expect it to push to the upside and give a retest for any other thing. Okay, now, so let me go to Euro USD. So last time here I spoke about Euro USD, and I'm coming to speak about it too. So I say that when the market is at it's trading, pricing or trading around the major support or resistance area, or the zones rather, I like to sit out. I really, really like to sit out. And you see that there was a whole lot here. You see how massive this Euro USD rather. You see how massive it was able to sell. And if I tell you to name the dominating, okay, whichever way, color or the candles you can see, you are going to tell me that it is more of red, it's more of a bearish candle than a bullish candle. Of course, there are even bullish candle here, but they are almost like you cannot even see them or figure them. So we have just 1, we have just 2, and we have just 3. So imagine from all the way from this upside to this downside, we had just 3. Even it didn't really bother about retracement, just kept selling to the downside, kept selling. And look at it, it hit a major support, went back, and now we are having it to go back into that base, because it will be able to react at the 50 to the 61 Fibonacci area. So the next place we are expecting Euro USD to come after it was able to react. We have seen a reaction here, and it had been able to engulf it to the outside. We expect it to. Okay. Thank you so much, Mr. Yomitunde. I saw the compliment. Thank you so much, Mr. Dan. I'm seeing the compliment. Thank you so much. So after that, I've been able to react from the 50 to the 61 Fibonacci area. The next place, and don't forget, I am not even coming here to come and tell you how to get 10 pips, how to get 20 pips, how to get 30 pips. I can say someone for a year who has been with us. Mr. Leo has been here for some time, and he can identify together with me, and even on our YouTube. Okay, I think YouTube is even a better witness. You can track back to our other YouTube videos we've been able want to drop. And you will see the massive lots, the massive peep rather we have been able to call. So the idea is not even to come and call 10 to 50 pips how we can cash them. No, like thousands of pips. And I think was it last week or last week? No, it was the previous week before last week. How we had US 30 over 1,000 pips. So yeah, these are major pips. How can you get into the market that you can have major returns, major pips into the market? So yes, look at it. It's just clear. The bigger time frames will control the smaller one. So what is the bigger one saying? If you can get it clear, if you can get it well on the bigger, you would also get it clear on the smaller. So look at it. It rallied down, went back for a retest, went down for a retracement, and then came back into the 50 to the 61 Fibonacci area. And the next place we are expecting it to come is back into this base. It's back into this base. And that is like 1,000 pips away from where it is presently. So now let's go to the weekly. So what are we seeing on the weekly? So on the weekly, yes. On the weekly, while it tried to push into the 50 to the 61 Fibonacci area, it looks like we have a double top or a triple top, whichever is the case you can call it. Okay. I don't really want to count this head along with it because it is not really significant. But let's say that if there's a way we can block it from here to this place, you will see that it is clear that we have a double top, this top, and the next one here. And on the double top, don't forget that for every double top, how do you trade it? You wait for the break and you wait for the retest. So by the retest of the parallel neckline, by the retest of the parallel neckline, the price is at where it is presently. And I think last week, I was talking to, on this live analysis, I was saying it to guys that please don't be deceived on Euro USD. The only way for you to enter is for you to wait, for you to clear this support and come down, except that I expect you to push back, because I think it was trading. I expect you to push back into this into the neckline for a retest. Okay, I think I'm still fine. Okay, so I am expecting that we have the parallel neckline which I've labeled out, and also this is a neckline by trend line. This is a neckline by trend line. So I am only going to be satisfied to see a major reaction, a major engulfing pattern. Okay, a major reversal pattern or engulfing candle. So sorry about that. A major, reversal pattern or a engulfing candle. So as it is now, not on the weekly, you can do that on even the smaller time frame, like the 4 hours. But as it is, I'm still the contingency also, yes, that it might want to push into this trend line neckline. Okay, it really might want to push into this trend line neckline. Okay, but whichever is the case, I have been able to label it out. We have the neckline 1 here. If we react to hit here, then you would see a major engulfing candle to the upside. But I feel like it might really want to push to the upside to give us a retest even on the neckline, or on the trend line of the neckline. So I expect that it might want to, but that's just a contingency. So if you want to get into a sell, you're like, oh, okay, now this market I want to sell or buy. What's that thing that might not make it sell? So that thing that might not make it sell now is what I'm trying to say here. That's what we call contingency. So if you want to buy, then you have to look well into your chart. Okay, I know this market should buy, but what are the possibilities of this market not buying? What could be the constraints behind this market not buying? What could be the barrier, barricade? So now a barrier or barricade to this market not really selling is like you might want to still push up, to fulfill all righteousness. You might want to still push up to give a touch on this and then go to the downside. Now, how do you get into this market? You either wait for a proper engulfing candle to the downside, or if you see a reversal pattern even on the 4 hours, if you see, but so far so good, I've not seen any yet. So if you see, but you can also still wait to see if it's going to push to the upside. So you see, I think I said this earliest of the time we started this analysis. I said to buy and to sell is the one of the easiest thing to do. Okay, but the most hard thing to do is the patience. So even if you bring in a new person into this game today, into this game today, one of the easiest things that such person can do is to press buy or to press sell. But to analyze and to have patience and have a good risk management is the hardest thing, and that is even what sustains us in the market. So now, don't be in hesitation to press a buy or to press a sell. You have to calm down, see what the reading market wants to do. Let the price dictate for you. Okay, let the price dictate for you and follow. Okay, so that's it for us today, and that's my time with you. So I think I've been able to give us a very good nugget on what on S&P 500 US30 and also Euro USD. Okay, let me quickly say something about US oil too, because I think US oil too is almost doing what US30 and S&P 500 did. Okay, so it's almost like what US30 and S&P 500 did. So from here, so it's looking like the oil is just pushing. Oil is a buy. You know what I'm saying? This I'm going to tell us now. But it's looking like oil is just trying to push into the 0.27 fib extension before it pushes to the upside. So please don't get deceived on oil. Oil is a buy. But before then, let me show us why I think it is a buy. Okay. And this is the last thing I'm talking about. So oil has been able to engulf, a pushback for this, because for all the way from 2020, they've been pushing to the upside from a zone to zone, from zone to zone, break back to the next zone, support, zone to zone, and now it pushed from here back into this base. And into this base, it has been able to engulf it even on the monthly candle to the upside. And let's check the weekly, what is happening on the weekly. So on the weekly, after engulfing it to the upside, we saw a proper break, and it was not even by a candle, it was by 1, 2, 3 candles. So we saw a proper break to the upside. And on the proper break to the upside, we anticipated, yes, I could even remember here we called that the sell. So we anticipated a sell because we expected a retest from here to the downside. And of course, it has been able to form a retest. But what is it doing presently? On forming that retest, there is seemingly a W pattern that wants to form on the weekly. So if you look at the weekly, this is leg 1, and it's looking like leg 2 is forming presently. Okay, so I'm going to see if I can be able to move this here. Oh, okay. No, exactly. So if you can see clearly, you will see I'm trying to label this leg as leg 1, and this leg, I'm anticipating that this leg is just leg 2. All it just wants to do is just to make people feel like, oh yeah, I want to sell, get into me, sell, get into me, sell. And as we are seeing a similar W pattern, other people are even seeing, let me sorry about that, please. Other people might already be seeing a hand pattern that this is the push and it's just going to push down, it's still oil is selling. Please don't get deceived. On the overall has told us that oil is on what overall buy. All it's just doing presently is what is actually retracing, and we've seen the retracement, but it's looking like it's a similar W pattern wants to form on the weekly. And also don't forget that manipulation tends to happen a lot around the support or resistance area. So that is it with me, from me myself, I myself to you guys. Thank you for staying to the end of this live analysis. I want to say thank you and shout out to everyone who stayed through. Mr. Dan, thank you so much for staying. Thank you so much for joining. It's so beautiful having you here. Mr. Liu, thank you so much for joining. It's so beautiful having you here. Mr. Ayemi Tunde, thank you so much for joining. It's my honor to have you here. Mr. Austin, thank you for the continuous support. It's beautiful having you here. Mr. Luke, thank you so much for the continuous support. It's awesome having you around with me. Okay, and I don't think there's any other person. And even for those that have joined in and left due to one reason or the other, maybe their network or maybe where they are is not so serene, or probably maybe where the eye is not also conducive. I understand and really do appreciate every one of us. And if you still really want to reflect back into this video, I promise you that it's going to be posted on our YouTube. It will be posted on our YouTube channel. So thank you so much, everyone. If you don't have a review, please drop it in the view. Let others also know that they are missing a lot by not joining this live analysis. Tell them how benefiting it was for you. Tell them how you look forward to joining again next time. So I see you again on Tuesday next time, same place on Telegram by same time. See you again, and I hope that you have a blessed week, as I also have a blessed week. And please stay safe and be good. Thank you so much for joining. Bye. Thank you, everyone.